Now, in this unit, we are going to cover the 3 points, main 3 points: institutions of the finance. Then we will cover the cash flow, and one is the balance sheet. Now, first thing is that before going to say details of the institutions of the industrial finance, uh, we will try to understand the what are the learning objectives from this lecture. So first of all, understand the key institutions that support the industrial finance, and also you'll be able to learn the components and importance of the cash flow. And third, as we are going to learn about the balance sheet, so you can able to analyze and interpret a balance sheet. So by end of this lecture, you will be able to identify the major financial institutions, understand the how money flows in and out of the company, and read the balance sheet confidently. So let first point is of what that is nothing but the institution of industrial finance. So what is meant by the institution of industrial finance? So first we will try to understand what is the definition. So industrial finance refers to funds provided to industries for their operations, expansions, and the infrastructure. So that funds are nothing but industrial finance, that is referred to the industrial finance, and it is a backbone of the industrial development. So what is the need of the institutions of the industrial finance? The need is nothing but to smooth operation of the industry operations, and smooth executions, expansion of the business or expansion of the industries, uh, to develop the infrastructures. So for that we need the financial support, so that refer to the industrial finance. So it is called it as institution of industrial finance. Mm. So it has a very important role in the economic development. So there are different types of institutions. One is called a short term, second is medium term, and third is long term finance. So there are some key points related with the institutions of industrial finance. So let's begin with the IDBI, which is established to provide the long-term credit to industrial enterprises. So it was one of the largest, you can say, earliest development bank. So as like many of the banks are available, mm, so which they gives the support to the industry in terms of finance. So as I listed some of the banks here or the financial corporations who supports for the finance to the industries. So one I have listed nothing but the IDBI, that is Industrial Development Bank of India. Second is Industrial Finance Corporation of India, that is IFCI. Third is Small Industries Development Bank of India, so SIDBI. And fourth is State Finance Corporations, SFCs. Fifth, AXIM Bank, and fourth is Commercial Bank. These banks are particularly supporting for the finance to the industries. So, what is mean by the role and function? What are the role and function of the institutions of industrial finance? So, these institutions, what we seen in the last slide, was they support the industries by providing the loans, guarantees, and even equity partitions in some cases. So first role is what? They provide the term, roles and working capital. Second role and function is nothing but encourage the entrepreneurship by providing the loan and the guarantees. They are going to encourage to become a entrepreneur. And third is financial assistance for the modernization and expansion, simply for what you can say, for modernization of the industry or the for expansion of the business. The financial assistance I can get from the bank corporations. And fourth is support to MSMEs. MSM is a central government corporation who gives the different platforms. They are going to get offer the different platforms that which from the schemes they offers, the industries can expand their own business, or you can we get the encourage from the from the MSME to become an entrepreneur. Now, second point from this lecture, which is very important, that is nothing but cash flow. First of all, what is the definition of cash flow? Then we'll see the importance and types. First of all, what is the cash flow? So, cash flow is simply nothing but the movement of money in and out of the business. The money which are coming to the industry or outgoing to the industry, outgoing from the industry. So that movement of money is called it as cash flow. Unlike a profit, you can say profit. It reflects the real time liquidity of the company. So you can say there are three types of cash flow. So before seeing the types of cash flow, make a note of that. This is a very important key from the financial management. So because as we seen in the earlier units that we learn about the production management. Right? So whatever the raw material we are going to purchase, if you want to, as we are going, as the industry is going to buy some products, or buy for the raw materials, so obvious that they have to pay for it. Also, they are selling their own products. Also, they are getting the profits from them. So, which are the money are going into the company or out of the company. So that is called as the cash flow. So this is having the very important role in the financial management. Now, third point is of types. The first type is nothing but operating activities. Operating activities means the day-to-day transactions which are happen for the smooth operation of the industries. So for the smooth operations, uh, the money has to or transaction has to do it to purchase something, to sell something. Okay, so that is one kind of cash flow that is called as operating activities. Second is investing activities. Obviously, every industry or organization, they are having their own. They're going to purchase their own assets, mm, or they're going to sell something. So that is called as investing activities. Third is financing activities, as means the industries or the organization are taking the loans and paying their dividends, mm, and like that, like a loan, guarantees, dividend. So such kind of financial things are coming under the cash flow, a type of financing activities. So cash flow from the operations is the most critical as it reflects the company's core health. Now just I will show you for example a sample cash flow statement. That is one kind of format you can say. So they have mentioned the of activity in terms of the types: operating, investing, financing. So what are the cash inflows and outflows? Inflows means the money coming into the industry. Hmm. Outflows, it is outgoing, simply outgoing money. So cash flow, let here mention under the activity of the operating. So X rupees is of cash inflows. This money is coming to the company. Hmm. So Y rupees is nothing but cash outflows. Outflows means the money has to pay. It means outgoing. Huh? As similarly, the investing in the category of investing, the cash flows rupees is of cash inflows is nothing but A rupees and cash outflows is nothing but B rupees. So third, as a type financing, the activity is financing. Under that, the cash flow inflows of M rupees and outflows is of N rupees. So such kind, this is one kind of a simple statement format for the cash flow is mentioned. Here simply a basic, here very basic format of a cash flow statement. So you will notice it's broken into the three sections based on the types of the activities. And the last part, that is nothing but balance sheet. Last point of this unit, balance sheet. What do you mean by the balance sheet? First question as we are getting arising. That is nothing but the what is the balance sheet? So balance sheet is a statement that summarizes what a company owns and owes at a specific point in time. It means that, for example, you can say your bank statement. As bank statement is saying how much balance you have it. Also gives the information that as per the time where you have spent the money or deposited, withdrawal, the all kind of transactions are getting into the statement, bank statement. Similar way, industry has to maintain the balance sheet. So the balance sheet gives this snapshot of the company's financial position. So in which get the balance, financial balance. Also, it composed of the assets, liabilities, and equity. Based on the accounting equations, each industry has to prepare the balance sheet. So in which all the details come into the picture. Mhm. So you can say here the simple format of the balance sheet is shown. The first column is of assets and second column is of liability and equity. So in the assets, the current assets, fixed assets, and investment assets. So liability and equity is it means of the current liabilities, long-term liabilities, and shareholders' equity. So as into this category, industries are maintaining their own balance sheet. So from the balance sheet, came to know that what is the financial position of the industry of the company. Simply as we can say here that from the last table of the that format of the balance sheet, that is nothing but the assets are everything the business owns, while liability are that it owes always. So equity is that is the owner's claim after settling all obligations. So for based on that, so came to main thing, that is nothing but what is the importance of the balance sheet. So from investors to managers, everyone refers the balance sheet to understand if if business is solvent and how efficiently it's managed. So I mentioned here some point wi- for the importance of the balance sheet. So first is assesses the financial health. That means position of the company will get it in terms of finance. Second, helps in investment decision. So based on their balance, uh, where to invest, how much have to invest. So that ideas are getting from the balance sheet. So it helps in the investment the decision. Mhm. Third is essential for the loan approach. So for the loan approach, so we have to know the what is the balance sheet, what have the financial condition of the industry. And the last basis for calculating the ratios. So these are nothing but the importance of the balance sheet. So what are the takeaways here? The first is nothing but financial institutions support industrial growth. Second is cash flow. Cash flow tracks real-time liquidity, and third is balance sheet reflect the financial health. So this is for the today's lecture. So I'll stop it here.